Well, Growers Edge, I think, has made us more money by allowing me to survey the local bids that I'm in the area that I want to sell my grain. The local elevators and the ethanol plants know that this information is out there, so they've got to be competitive if they want to get the grain. You know, we've been able to maximize our return on our farm.
Good afternoon and welcome to GrainTV. It's November 15th, 2013. To my left is Logan Burgess and I'm Brock Shimbano. We had a negative tone to end the week in Chicago. Let's turn with a fire tip to see how we ended. Corn was down 4.5 cents. Soybeans, the leader to the downside, down 33 cents. Wheat in Chicago off a quarter penny, and Kansas City wheat was off 4 3/4 as well. You know, Logan, if we take a look at that January contract with the daily candlesticks here, you can see that that last bar that we have, we broke through some key technical support levels. First, we broke through the 50-day moving average, which is the red line here. Next, we broke through that 100-day moving average, which was the blue line. And then last of all, we broke through that $13 support level. We thought that was going to be support, but we ended up ultimately going down, ending the day about $12.79. Right above the 200-day moving average, which is sitting right around $12.75 or so.
Yeah, you know, certainly a very weak day today from a technical aspect. And if you kind of want to look at where some of this weakness started, I think that we need to go back to yesterday's action. Take a look here at the candlestick that we printed for yesterday. This is what traders call a doji symbol, and basically it's where we traded higher, we traded lower during the trade session, but we ended the trade session right about where the open was. Not a big daily change in terms of price. Technical traders look at that as an indication that there's a lot of uncertainty about price direction, and certainly coming on the heels of 5 or 6 positive days in soybeans, any uncertainty about price direction generally means that we're due to see a bit of a retracement here. So I think from a technical aspect, things started on kind of a weak footing. We didn't get great export sales reported. We'll talk about that here in a minute. But one other factor that I think really needs to be focused on is what we saw yesterday after the market closed in the cash market. Take a look here at this chart. This details average spot soybean basis against the January 14 futures contract. And you can see here just in the last couple of days, we've really seen basis come off 1 or 2 cents. It might not sound like a big move, but that's a very big move to see over a 1 or 2 day period here when looking at the national average. If we look at a couple key processing plants, we saw basis down 10 to 15 cents yesterday. So in general here, I think we saw kind of the bottom fall out of the cash market. It's not unreasonable to think we're going to see basis weaken when futures rally, but a move like that, I think, is an indication that the futures may be due for a move lower. So you add that into kind of the technical landscape. We certainly saw a lot of new shorts being added into the market today, in addition to a lot of longs that were being taken off that were in a profitable position after the November 8th WASDE report. So I think, you know, on net, that's kind of what we saw in today's action. Wouldn't be surprised if we saw a little bit more of a retracement next week there in the soybean market.
You know, we could see basis actually pop up just a little bit. We did see a significant sell-off in the futures.
Yep.
A lot of times you'll see end users start to bid up basis just to counteract some of those future losses.
Yep.
And one area that we could focus on is maybe on the crush facilities. We did get the NOPA crush numbers out today, and that was very strong. If you take a look here at the actual numbers that were reported, you can see that last column for October, we came in at 157 million bushels being crushed during the month of October when expectations were for about 154 million. So we came in well above expectations. That really should have supported the market, but I think what you highlighted earlier, the weak cash basis already and the technical landscape that we were looking at, that really allowed the door to open up and move lower for the soybeans on the futures. But something that is concerning here is the soy oil stocks are continue to remain very tight right now.
Yep.
We are actually even tighter than what analysts were expecting. So I would look for crushers to continue to crush soybeans at a very rapid pace over the next couple of months.
Yeah, you know, in today's crush number for soybeans as well, you know, some traders, I think, you know, you and I were talking about this before the show, some people kind of view this as more of just confirmation of good crush, not necessarily a new bullish story here for the soybean market. So that might have been one reason why we didn't see the soybean crush numbers really work to prop up soybeans in today's action. When these numbers came out, we saw a little bit of a price response for beans, but it was really short-lived, and then we just proceeded to move lower there into the close. You know, it was kind of a fundamental buffet today, if I can use that word, in terms of what we got on the demand side. As I said, we did get export sales this morning as well. Not a great day in terms of sales for soybeans. 848,000 tons reported sold there. Wheat had a relatively weak week there in terms of export sales, missing analyst expectations. The one bright spot was the corn sales coming in at 1,200,000 tons. So in general, though, it seems like the weakness in beans really spilled over into corn and wheat here in today's action. With that in mind, Brock, where do we stand right now in terms of the pace needed to meet USDA expectations?
Yeah, if we take a look at the chart, we've been following all marketing year long. The red line here is the seasonal pace to meet those revised expectations by the USDA, and what we're looking at here is the corn chart. The blue bar is actually what we saw this week for sales of corn. You can see that over the last few weeks, we've been very good on export sales for corn. Currently on the year, we're running about 190 million bushels ahead of that revised pace by the USDA. So very strong corn sales, especially over the last several weeks here. Soybeans, we met expectations here once again this week, but we have started to taper off just a little bit, and that's typical. For this time of year. Soybeans, we tend to front load our sales, our export sales, and start to drift lower throughout the remainder of the year. We'll have to see if there's any problems with South American production. We could see more export sales come onto our books. But as it stands right now, I would imagine that we're going to start to drift a little bit lower on export sales for soybeans. So that's another reason that we could see soybean prices come down just a little bit here over the next couple of weeks as well. On the year for soybeans, we're running about 297 million bushels ahead of pace to meet the USDA projections. But like I said, that's mostly front-loaded, and we should see that fall as we move throughout the marketing year.
Yeah, in general here over the next couple of weeks, certainly demand is going to remain a key focus here for the soybean market, and a huge component of that demand is the state of the South American crop. Certainly right now, they're getting well underway planting in both Argentina and Brazil. So, like I said, as we enter winter, typically we see the focus really turn to South America, and I think if this soybean market is going to make a new low, make a lower price than what we saw coming into the November 8th WASDE report, that could be on the heels of some good planting expectations out of South America. So we'll help keep you posted on there as we move through the coming weeks here on GrainTV. In general, though, that's what we saw here for a Friday in the grain market. Certainly a lot of weakness out of soybeans. Corn and wheat had a relatively quiet day. Wouldn't be surprising if we saw a little bit more weakness out of soybeans next week as well. We'll have to see what it brings, though. As always, we'll be back here on Monday to report it to you here on GrainTV. Thanks for joining us. Have a great weekend.